Today, we've got about 180 people here, which is really a record for a UDI luncheon. So I'd certainly like to welcome all of you, and I hope that you've had a tremendous Christmas season, and wishing you all the very best for 2016. It should be an exciting year. My name is Dave Chard. I'm the chair of the UDI Capital Region, and given that we have quite a full agenda here today, I'd ask that you please get started with your lunch. You've got your salads in front of you there, and I'm going to natter away up here for the next few minutes and just give you a little rundown on who we've got here today and what UDI will be doing over the next few months. So please pick up your forks and get started on your salad. And we've got a very exciting group who will be introduced more formally. And that's the main reason you've come here today, to hear them. I'd like to just acknowledge the dignitaries who are here. Mayor Barb Desjardins, Township of Esquimalt. Barb, I hope you are here. If not, you'll be walking in shortly. Mayor Lisa Helps will be joining us a little bit later on. She had a prior commitment, but will be here soon. Councillor Susan Lowe, also of Esquimalt. As I always say, with we cannot do these luncheons without our annual sponsors. I would like to just acknowledge Fortis BC, Grant Thornton, and we also have another new annual sponsor, and that's CBRE. So thank you very much to all three of you sponsors for making it possible with your very generous donations. We're going to hear a little bit more from CBRE later. We have many of our board members from UDI here today. I'm just going to read out your names, and as always, thank you very much for your participation. And these organizations don't run without volunteers, and they are Keith Barban, Jane Bradbury, Cam Cooper, Kent Fullerton, Sam Ganong, Robert Joel, Charles Kiroff, Amanda Neal, Bejan Nastani, Sarah Pope, Ross Tuck, and Anna Ray. Thank you very much for participating on the board. Once again, Kathy Hogan and Tanya are just tremendous in organizing these luncheons and all of the other events, such as the Christmas party that we had. We raised some $3,500, and those funds went to Santa's Anonymous. I think again it was one of the largest Christmas parties that we've ever had. Great turnout, and I apologize that the board tried to sing Merry Christmas to you. I know it was rather a poor performance, but appreciate you not throwing eggs. Upcoming events that we've got coming down here. Next month is going to be an interesting luncheon. We've got the Legends. And the Legends will be developers who have been very instrumental in enhancing the region, the capital region. So we've got a couple of great speakers lined up for that, and I hope that you'll put it on your calendar for February the 16th. The golf tournament, which is always a big event for UDI, is scheduled for May the 12th. So again, and the big theme this year is the Big Kahuna Luau. So get those Hawaiian shirts ready. On Thursday, June the 23rd, we're going to have a local development tour. That tour is going to be on the West Shore. Have not been out there for quite some time. So please book that, and we look forward to having great participation. These development tours normally sell out pretty much as soon as they're listed, so get ready for that one. I'm going to leave it at that for now. We will get on a little bit later with our introductions and lunch sponsors. But for now, please enjoy your lunch, and I'll come back shortly to give you a little more info. I'm going to continue on here with a few introductions. If I could have your attention, would be really appreciated. You're a well-behaved crowd. Thank you very much. we're very fortunate to have Mayor Lisa Helps here. And Lisa is going to give us just a little introduction about the new business hub that has been opened at the City Hall. So Lisa, how would you like to tell us about the hub?
Thank you, Dave. I would love to tell you about the hub. So many of you may remember I was here at your invitation. Thanks again, giving a kind of report on my first year in office. And I talked a little bit about the Mayor's Task Force on Economic Development and Prosperity, and I said I believe that if I had my way, we would have our business hub, which was the first outcome of the task force, open before the end of 2015. And indeed, the second week of December, we opened the business hub at City Hall. So we're open for business. Just to give you a brief outline of the purpose of the hub, it is, and again, this comes from our action plan called Making Victoria, Unleashing Potential. The purpose of the hub is to streamline and demystify all business and development processes at City Hall, to make it easier to do business in Victoria, to advise on how to reduce unnecessary red tape, to connect entrepreneurs with the resources they need, and to accelerate the development of a vibrant downtown. If I could, and I tried to text her and warn her that I was going to do this, if Carrie Moore could stand up and wave. There she is. Carrie is the city's manager of strategic relations and business development, and the hub is her project. She reports that it's going very well. We've had about 4 or 5 people per day dropping in, from first-time entrepreneurs to people from Calgary who want to open a second location in Victoria. We will have a business ambassador to assist Carrie and, most importantly, to assist you, hired and up and running by early February. As I said at the launch of the Business Hub, it's a lean prototype. We're not throwing tons of tax dollars at it. We want it to deliver. And most importantly, we want to hear from you about what's working and what's not. So if you haven't checked it out, you walk into City Hall, turn to your left, you'll see the Business Hub. And please direct entrepreneurs, investors, anyone you think who could benefit from visiting the hub and getting some support to grow prosperity in Victoria. We are open for business, and thanks to Kathy for inviting me to share the good news. Take care.
Lisa, thank you very much for sharing that. So, given these hubs are sort of set up for us development types, I think we should all go and check it out over the next few weeks. Let's not all go immediately after lunch. Let's give them a little bit of a break here, but it'll be very interesting to see. I'm sure it's going to really enhance the process with the City Hall. We have 2 lunch sponsors today, and they are the Times Columnist and CBRE. And I'd like to just invite Pablo Miranda to come up and just give us a brief little snapshot on the Times Columnist and just what's happening with the Times.
Hello, everyone. It's great to see so many Times Columnist advertisers here today. Thank you to you and to all of our readers in the room today. Thank you very much. We appreciate it. My name is Pablo Miranda. I'm responsible for real estate advertising in the Times Columnist. My team and I work with, as I mentioned, many of you here today. Today, the Times Columnist really offers an incredible array of options to help you grow your business. The Times Columnist print edition, our first product that we started with about 157 years ago, continues to be incredibly strong in our marketplace, in particular when compared against other metro dailies across the country. It's the only paid daily newspaper in our marketplace today, and when someone pays for a publication, you can rest assured they're going to read it and see your advertising inside. Every Saturday, we publish our home section, and that helps many of you in this room today sell properties. Our second newspaper, TC Extra Extra, that's delivered free of charge every Thursday to all openly accessible homes in Greater Victoria that do not subscribe to the Times Columnist. When advertisers combine the Times Columnist and TC Extra Extra, they get total market coverage for their advertising. Now, in addition to newspapers, we've also entered into the magazine industry in a pretty big way. Just 2 of our publications include Capital, our business magazine, as well as Capital Home, and you'll find a copy of our most recent edition on your tables today. Capital Home publishes 4 times per year, and all of our magazines, as well as our newspapers, are entirely focused on local content. There you'll find many of your own projects inside the pages of Capital Home, as well as inside the pages of Homes. Thank you very much for this opportunity to join you here today. If you have any questions about how the Victoria Times Colonist can help you grow your business, please feel free to contact me or any one of our friendly representatives anytime. Enjoy your lunch.
Pablo, thanks very much. We very much appreciate the sponsorship today. Our next is Norm Taylor. Norm is the Executive Vice President and Managing Director of CBRE, and you all have one of these nice green umbrellas on the back of your chair, and this is a gift here from CBRE. So Norm, would you like to just come up for a few minutes?
Thank you, Wayne. It's my pleasure to be here today, and yes, feel free to take those umbrellas home with you. It rains a lot more in Vancouver, but you just never know, so happy to provide those to you. Thank you for allowing me a few minutes just to say a couple words about CBRE. Wayne introduced me, and my role is to run our operations within British Columbia. Chris Rust and Ross Marshall are our lead brokers running the office operations here in Victoria. CBRE is the largest commercial real estate services firm in the world by all measures. To give you a sense of that scale or scope, our revenues are estimated to be $15 billion this year. We're currently still analyzing those for a final release as the auditors work away on that. We employ over 72,000 people, and we complete over 300,000 real estate transactions globally. Our mission statement is very simple and straightforward. Right from our global CEO, we desire to be the preeminent vertically integrated real estate and investment firm servicing our clients with industry-leading market collaboration. Being big and being a Fortune 500 company means absolutely nothing if we can't provide value in local markets like Victoria. And we get that. Often CB's been criticized for just being big and bragging about how big we are. Our mission is to make sure that we are providing value at the local level in markets like Vancouver and Victoria. The key word in our mission statement is market-leading collaboration. This year alone, we spent $250 million on information, technology, and infrastructure and business applications, and next year we're going to spend another $300 million. And we're making that investment so that we can connect our people across our global footprint. So people like Chris and Ross and other brokers within British Columbia are more connected, getting more benchmarking trends, better information, and better tools to better serve our clients. Currently in British Columbia, the services that we can provide are the traditional commercial brokerage, sale and leasing of retail, office, industrial, multifamily and land transactions, many of which have been handled by Chris and Russ locally. We complement that service by adding new service lines within British Columbia, being project management, debt and structured finance, valuation and appraisal, and finally strategic consulting. In fact, we've just made globally a $1.2 billion investment into Global Workplace Solutions, which was a division of Johnson's Control. And I'm proud to say now we can work with occupiers in British Columbia to help you do more with less. So thank you very much for having us today. We're proud to be a sponsor of UDI, and we very much look forward to our ongoing relationship. Enjoy the umbrellas.
Thanks very much, Norm. Now for the big reason why you all came here is to hear our expert panel of where's the market going for 2016. On your tables, you will find a little list like this, which outlines who the panelists are. I'd ask you to take a quick critique because Wayne Ford, who is our moderator, is not going to run through that. We figure you can all read the list and get the good background on who our panelists are. So I'm going to pass it over to Wayne Ford, who will be our moderator, and we'll invite your panel up here. Wayne?
One, you're invited. Jane, Robert, and Sage. So we've got some forecast questions here we're going to talk to the panelists about and hope to enlighten you, and there'll be some time for questions and answers after. So the following question is applicable to each panelist's specialty. We'll start with Guy. What type of product is selling the best in the capital region? Condos, townhouses, single-family dwelling, and what quality of product? Is it the high end or the average?
Thanks, Wayne. I think it's safe to say that pretty much everything in our market's selling these days. We look at last year, we see our numbers up by just under 24% across the capital region as far as sales. To illustrate this better, you can see that our list to sell ratio, our sell to active listing ratios jumped up from about 15 to 30%, which means that overall our sales compared to how many listings we actually carry in the marketplace is almost doubled over the last year. As far as in terms of quality of product versus lower end versus higher end, we've seen that houses over $1 million have actually, although the market's up 24%, we see houses that are a product that's priced over $1 million has gone up over 65%. And for those of you that think that house around $1 million isn't so much anymore, this figure is the same for houses that are, or properties that are $2 million or more. As far as what's selling, we look at rate in the capital region. In Victoria and Vic West, we see that condo sales just over 1,000 versus single family just over 500. And as you get out of the core and into the outlying areas, you see that number bounce back.
Thanks, Guy. Robert, so what are you seeing in the office commercial market? Cap rates, size and quality of offerings attracting the investor?
Yeah, there's an incredible diversity in terms of the depth of demand for office product right now. It's ranging from high levels of interest from institutional investors looking for trophy grade, larger, well-leased product, but it's also coming from private individuals, both local and from other markets, with an interest in Class B, Class C product, both leased as well as unleased, looking at it through a conversion lens. I think a lot of this is being driven by very liquid capital markets, very cheap borrowing rates, and the combination of investment dollars being available from the equity side as well as a lot of liquidity on the debt side. It's led to cap rate environment that's probably as low as we've ever seen in the capital region. So for Class A, downtown, well-leased located product, we're probably now in the mid to upper 5% cap rate, and not much north of that as the quality spectrum declines. It doesn't appear that much of that demand for product is going to abate. I think what the market is challenged to do is meet the investment interest with availability of product for sale. So that's undoubtedly created a supply-demand imbalance that's created some upward support for pricing levels.
Thanks. Jane, from the retail perspective, what are you seeing in the sale of retail properties in the market?
I think from the sale of retail properties, again, we're seeing the same kind of thing. There's a lot of capital and not necessarily a lot of deals out there. There's been very few deals in the last year, and those that have occurred have had a cap rate that's about 50 to 150 basis points below average. And I think that the demand is going to continue. I think with the exchange rate being what it is right now, properties with good fundamentals are going to continue to see high demand, which is going to further compress cap rates. From a leasing point of view, I think that lease rates are likely to remain flat at least through 2016, partly because of new product coming on the market in the context of more mixed-use type developments. It's not a lot of standalone retail per se. And I also think just given the vacancy rate downtown, we still have some catching up to do.
Thank you. So just for clarification before I ask Sage, for you speed readers, she's with RawMax, not Remax. Okay.
There's a good difference.
There's nothing wrong with being with Remax. Don't get me wrong.
Although we'd be happy to have her.
So, with your working harbor and your other industrial properties across our capital region, what do you see for growth in this sector and where?
Well, I'll speak to it at two levels. One is as an operational entity providing construction services locally, and we are seeing that it is an active market, and there are a lot of jobs to bid on, which is a good place to be in. It's a very competitive market because there's a lot of players in it, but it is quite active, which is reassuring. And what we need to do is just ensure that that continues out beyond 2016. So we're quite optimistic to see growth in 2016 and want to ensure that that's sustainable beyond it. As owners of industrial real estate, we are seeing a lot of demand for the properties that we hold as well. And I'll echo what Robert said, is that there is a lot of cash in the market that's looking for places to be put that can generate a return. And our properties, a lot of our properties are utilized by ourselves as a customer, but there is still a lot of demand coming, looking for industrial real estate, particularly in close proximity to urban cores, because the transportation costs are highly relevant for the margins in these types of businesses.
Thank you. So Guy, what's the current condition of the residential, single family and multi in the capital region? What about the supply? Where's your concerns?
Well, again, our concerns are, all over. What you've seen, first of all, when in the real estate board, we tend to do a lot of comparisons year over year. It helps us, see a pretty clear picture of where we're at if we compare it to the year before and the year before that. And what we've seen is, as I mentioned earlier, sales are up almost 24% last year, about 10 or 11% the year before that. But when you look at a combined increase, we're looking at on somewhat of 38 to 39% increase in sales versus where we were 2 years ago. So this is really, been tough on the inventory. The amount of listings that do come on month after month, year after year, are about the same. They don't change a lot. So what this has really done is kick the heck out of our inventory. Our inventory in Victoria runs a very similar pattern year after year. It starts low, it rises throughout the spring, it plateaus, end of the spring, it drops down for the summer, plateaus for the summer, and then it starts to fall off. When we look at even back 3 or 4 years ago, we would see a peak in the summer of 5,000 residential listings and a low of 3,900 come around Christmas or New Year's. 2013, we see both of those numbers drop to 4,500 and 3,200. 2014, even lower, 4,300 at the peak, 29. And now this past year, we look at only seeing 3,800 listings at the peak in the summer and 2,300 listings, just over 2,300 this past Christmas. So you can see our peak this year didn't even meet the really slow time of 4 years ago. So these sales have really had a tremendous effect on our inventory.
Thank you. So with the influx of residential in the downtown Victoria area, Jane, how do you see it affecting the retail vacancies, and where do you see interested groups coming from on the retail and commercial fronts?
Well, I think the old adage of retail follows rooftops is certainly still true today. So I would anticipate that the vacancy rate would go down as the residential developments start to actually sell and people start to be moving into them and living there downtown. I think in particular, we're going to see a rise in amenity-focused retail in the downtown core, because the sales pitches associated with a lot of these developments really revolve around the concept of 20-minute living. And so you're going to need to actually have the retail come into play so that that can actually be a reality for people. I'm optimistic that within the next 5 years we will still start to see some multinationals come to the downtown core as well. We haven't had a new one in probably 10 years, so we're well overdue. But I don't really anticipate that happening this year. I think that they still consider Canada to be a viable market, but they're being a little bit more choosy about the locations that they roll out, perhaps learning some lessons from Target. I also think that as we get more density downtown, and also as multi-channel retailing, so that's retailing that combines e-commerce and brick and mortar into a pretty seamless customer experience. I think as multinationals start to figure that out, because they're so formulaic about where they go, I think that that's going to make the decision a little bit easier for them to come into the Victorian market. And I think in the interim, the really interesting thing is that provides a great opportunity for a lot of strong local retailers to fill the void, which is I think what we're seeing. Regionally, I also think we should be keeping our eye on some of the stuff that's happening on the mainland. I think the Tsawwassen Mills development with 1.2 million square feet of retail is going to be significant. We're also starting to see the arrival of new department stores in the form of Nordstrom's, which I think is great. We could use some department store competition in the area, but also some of the newer discount stores. So Nordstrom Rack is on a pretty aggressive expansion plan. They identified Vancouver as being a potential market. Saxoff Fifth they are committed to going into Tsawwassen Mills, so that'll be significant as well. And there's a whole bunch of other new concepts that are related. Even Forever 21, which is generally considered to be more of a discount retailer, has got a discount version of Forever 21 now. And so I think those retailers are ones to keep our eye on, because I think there's definitely been a bit of a split in the market.
So is the discount called Forever 19 or?
Called F21 Red, I think. Yeah.
So guys, is there more room for residential in the downtown? And if yes, what type?
I think, first of all, the short answer to that is yes. I think a lot of our buyers would like to see some higher density residential units closer to town or right downtown. There's certainly a niche for that.
Okay. So with the influx of offshore money, investors in the Vancouver area, which we all read about, have you seen any impact on our market? Guy, we'll start with you.
I've got a lot of questions here, Wayne.
Sorry. but being the president of the real estate board has a certain burden.
As you can imagine, it's very tough for us to track our buyers as far as when it comes to nationality or exactly where they come from on a organized real estate basis. What I can tell you is that the largest amount of out-of-town buyers that we still deal with is interprovincial. So those are buyers that come from Alberta and Ontario primarily, but not exclusively. But the biggest amount of our out-of-town buyers are still Canadians coming to Victoria. With that said, we do see a much greater amount of offshore buyers. It's still a much smaller percentage than Canadian buyers, but we do see a larger scale of offshore buyers, and those predominantly buying in higher end neighborhoods like you'll see in Bay, parts of Saanich East, Gordon Head, Fairfield, and even, believe it or not, some of the higher end homes in Bear Mountain. So,
Jane, comments?
Am I there? Okay, there. From a retail sales point of view, again, I think obviously we all know that investors have been displaced out of the Vancouver market because it is so high end. So again, good quality retail assets are quite coveted, and I think we'll continue to see demand. The one thing I've found really interesting is actually the number of investors that we're seeing on a leasing front coming in under the immigrant or startup visa program, the investor visa program. There's been a number of local downtown businesses that have been sold to individuals immigrating under that program. I'm aware of a few more that are in the process of waiting to be approved. And I think that's a trend that we're going to continue to see through 2016.
Robert.
There's no doubt that there's been an increased interest from offshore investors in the commercial segment over the last 18 months. I think thus far most of the transactions that have occurred with that buyer base has been in the small to medium-sized transactions, 1 to 15 million, thereabouts. I don't think that that's reflective of a lack of interest in larger opportunities. It's simply a lack of availability of larger opportunities. So without question, it's become a very real and relevant player within the investment sales world.
Thanks. Sage, any impact in your markets?
Not in a material way. I think we see some interest from private equity type money, but not at the individual level. Again, that is more from an investment perspective and looking for a return versus the physical proximities, and that would be mixed holdings within the private equity firm versus at an individual level.
Thanks. So with the significant amount of construction going on in the capital region, do you see anything happening with construction costs? Can you find enough labor? Where's the labor coming from? And who's training them? Sage.
It's getting really expensive, but it's really good quality. I'm joking. There's a couple of pieces that are going to impact construction costs. The currency is a large one. We have a ready-mix company, and some of our components are coming in from outside of Canada. So you're going to have some subcomponents of some of these commodities that are going to increase in their costs. It's just going to happen with the currency impact. That said, it's a very competitive market in Victoria, and there's a lot of players in the construction space. So good quality absolutely matters, but low price wins. And they are competitive bidding processes across the board, and it's awarded to the low cost, and it's going to remain price competitive. So that addresses the price piece. On the labor piece, we actually have a large influx of available high quality labor right now. You look at the amount of scaffolding that's up and around town, there's a lot of people that are working, and Alberta, as we know, is not. And so we have great quality talent coming in, and Victoria is a fantastic place to live. If we could hire all of these people and ensure that they were employed long term, we would take advantage of that. We're being very selective in our hiring, getting some good quality, very experienced talent, but we do not have a shortage of talent right now.
Robert?
Yeah, I would echo that on the labor availability side. That was one of our biggest concerns as we kicked off a couple of big projects that we have underway at the moment, and it hasn't been borne out in our early end procurement anyway. We've had lots of depth in terms of the labor market we can avail ourselves to. I think some of that is without a doubt the Alberta influence, albeit I think perhaps the potential effect of that is sometimes overstated, given that trades have to be specialized and match with the disciplines needed for what are very different projects than some of the oil field related construction activities that were going on in Alberta. But nonetheless, it is creating some slack, and it is creating a deeper pool of high quality trades labor, which is encouraging. It's also really encouraging to see groups like Camosun doing the front end training investments that are going on there right now. You know, that's one of the not often spoke about, but certainly overarching concerns within the trades, which is the average demographics of the industry is getting older and older. And so to have the resources locally to train juniors and get people on the front end into that industry young, there's some great jobs to be had there, great wages to be earned, and it's great to see that happening in our region. In terms of cost of construction, you know, this is an island in the physical sense, but also sometimes symbolically as well in terms of how we procure work. So you have a deeper pool or a shallower pool of trades to draw on for key disciplines within project activity. And with the amount of construction volume that's taking place, not just driven by the private sector, but a lot of the public sector sponsored projects that are going on as well, there is some upward pressure on pricing, at least that we're seeing anyway, particularly in trades like glazing, cladding as one example where we're seeing it hit most acutely.
Thank you. So typically, 1 year before an election, the money starts flowing from government. We have an election coming in May of 2017. And we also have a new federal government who's okay with a budget deficit of 10 billion plus and counting. So how do you see this aligning with other forecasts for our economy? What will it do for your sector? And do you see any infrastructure spending coming to the capital, sewage treatment, transit, etc.? Jane.
I'm not an economist at all, and we deal on a much smaller scale, so I'll defer that part to Robert. And as I was joking with my husband, I feel like this could be a PhD dissertation, this question. But the thing that I'm keeping, I don't think we're likely to get a huge amount of infrastructure dollars, especially federally, being funneled to the island. I do think, though, one thing that I'm keeping my eye on is what happens with transit, both provincially and federally with funding, because I think that we are in dire need of better transit in the CRD, and I would like to see us get some money for that. At a bare minimum, to do a better job of connecting the West Shore to downtown, but also to allow people to get around without a car more easily. That, from a retail point of view, results in typically more disposable income, a slightly more resilient economy, and a host of other benefits. So that's what I'm looking for.
Okay. Sage.
From an infrastructure perspective, and obviously on the construction side, the more the better. We'll be happy to bid that. But I think from our perspective, we have a differentiated asset in Victoria, which is a deep water harbor. And one of the expansion plans that we're looking at is expanding Point Hope Maritime for ship repair. And the timing really matters because you have a pressing need from the federal government to deal with their increased activity in the marine industry, and you have a provincial government that is also saying that economic development is important and ensuring that we have industrial-based jobs in rural or in urban areas is also important. And so there are some items that are happening both at a federal and a provincial level that are driving some of our business decisions, and those are private investments into infrastructure. So I think there's two components. One is the public investment into infrastructure, that any of it that happens here is great. We need to work jointly to put those business cases together at a political level to ensure that we have the interest at a federal and provincial level. But at a private investment in infrastructure perspective, timing matters, and the federal government and provincial government, it's an important time to be having those conversations.
Thanks. Robert.
Yeah, not much to add other than from my narrow lens of the world, I have a hard time foreseeing major additional influx of infrastructure capital over the next 12 to 36 months, call it, beyond what's already committed for some of the key regional strategic priorities, being Mackenzie Interchange, Belleville Terminal, sewage treatment, the completion of the Johnson Street Bridge. That doesn't mean we don't have a considerable need. Obviously, we're all well aware of the infrastructure deficits that both exist within the city, but in the region more generally. But I think there's some prevailing challenges to accessing further infrastructure dollars. One, I think we undoubtedly have to acknowledge the practical reality of misalignment between our local political representation and the prevailing power base at the upper levels of government that without a doubt has an effect in terms of voice at the table. I think the other is we've got some pretty significant projects on the go right now that have, to varying degrees, met with the support of senior levels of government. And I think as a region, before we want to start talking about what's next, we got to finish doing a good job of what we've currently got on the table.
Thanks. Well, Guy, I've let you rest for a while, but you got to wake up and do this one.
Our take is a little different than perhaps that you've heard here, or how the board kind of looks at this, or our membership looks at this. First of all, there's 11 real estate boards across Canada or British Columbia that make up they're all members of the British Columbia Real Estate Association, as well as there's over 100 across Canada that make up the Canadian Real Estate Association. So both of those have very strong lobbying, proactive initiatives, and we take part in those quite frequently and often and vigorously. Federally, one of the things we've looked at is to try to, or provincially, one of the ones we try to deal with is a property purchase tax. As we all know, it's a very punitive tax in the real estate industry. It started off being a 1% tax when it was originally brought in back in the day, and now, of course, it's virtually a 2% tax because it's everything over $200,000. And we really feel that money freed up would help, just help buyers, buy more property, sell more property, invest in their properties, fix their properties. And that, I think, would all benefit people in this room. And we even feel in some type of indexing. So we work really hard on that every year, and we'll just continue to do that. Another one provincially we look at is grow-up remediation, and these properties being stigmatized properties. We've been working hard to lobby the provincial government as to, for them to form some legislation that really deems what is stigmatized property, and how do we remedy that, and because it's causing lenders some grief when it comes to financing a lot of these properties. And federally, we've worked really hard on the federal level to try to help people raise the RSP amount that people are allowed to use to buy homes. So all of these things are some of the things we try to do just to just make the real estate industry stronger across Canada.
Thanks, Guy. So there's a lot of talk out there that we're headed for a recession, the world is ending. So where do you see the BC Capital Region economy going? Can we weather another serious downturn? Jane.
Keep starting with me.
I know. Well, you're confident.
No, I don't think we're headed for a particularly substantial recession. I think that Victoria is well situated in that we are a government city, so that does give us a certain amount of job security, which is important. I also think that our growing tech sector in the city is useful because we're looking at companies which largely export to, especially some of the more information technology oriented companies. They're, for one thing, servicing the government, but they're also exporting to the United States, which ultimately they're now basically getting 30 cents on every dollar that they're exporting, which is a huge boon, and I think will help our tech industry as well. From a retail point of view too, I'm actually happy to see that in our island we typically don't have a huge amount of standalone retail. Most of our retail has been developed in the context of transit-oriented or mixed-use neighborhoods, and those do tend to weather recessions better. So I'm optimistic that the retail sector will do okay.
Robert.
I think one of the virtues of Victoria has always been its comparative stability compared to other jurisdictions in the country. So our highs are never as high, our lows are never as low. When you look at the prevailing forces that are giving rise to some of the recessionary concerns, by and large, it's softness in the energy sector, weak commodity prices, and obviously that's an area of the macroeconomy that the capital region doesn't have a major amount of exposure, direct exposure to anyway. Meanwhile, I think you've got a lot of macro forces that are helping things here. Jane mentioned the weak dollar that's really bolstering our tourist economy. That's been an incredible boon over the last year and looks to continue unabated in the year ahead. And you're seeing that translate on the ground with reinvestment in assets like the one right across the street, the Grand Pacific, the Hilton Garden Inn. I mean, these are big dollars and real jobs that are indicative of confidence. The tech sector, again, is booming and showing real growth. Government downsizing, any that occurred 4 or 5 years ago, from the lens again through which we see it, that's largely stabilized, and in fact we're starting to see upward pressure on employment in that sector. So most of the core pillar economies of Victoria are showing strength right now, stability at worst, and growth in several cases. I think it's also really encouraging, and we'll give a nod to the city on this, that front and center on a lot of the strategic priorities of certainly City of Victoria government is focus on economic development, making sure we create the right conditions to ensure that our strong economies can get stronger, our strong industries can get stronger, and that the barriers are lessened for new business operators. So I think at the end of the day, that's really key front-end work as well to build on the strong momentum we've already got in a number of key areas.
Thanks. Guy?
Thanks, Wayne. As you can imagine, as a residential real estate realtor, I get asked about the global economy almost every day. Pause. What I'll try to do is try to answer that from more of a local standpoint, from our buyers and sellers, which are really your customers. I can't tell you how strong the interprovincial pressure is on our market. It's always been that way, but it just seems to be stronger every day. And I'll use 2008 as an example, because there was a real catastrophic global kind of thing that hit the whole world. And you saw it in Victoria, it really affected what happened in residential real estate. The buyers just dried up in the middle of 2008. They just ran for the hills based on what they were reading, what everybody was telling them. And then January 1st, 2009, they all woke up and they had their jobs and their money was still in their bank account and everything seemed to be fine, and they rushed back into the market at record paces. And in 2009, we saw some of the first 6 months of 2009, we saw sales that were really, really strong. And so that's kind of, I think, a lot of times what happens here in Victoria. The interprovincial migration is still really strong. People, no matter what they're doing, no matter how much money they have, when they live in other parts of Canada and they get to that day where it's coming to the end of their work cycle, there's just such a I don't want to say a large majority, it's not a large majority, but there's such a strong percentage that do want to live somewhere else where it's nice, and this is primarily what they do. And there's an economy in Victoria that we see all the time as realtors, especially been in business a long time. There's people that come here years, sometimes 3-5 years before they even get to that stage in their life, and they buy something and they just get into this market and they hold it, and then they eventually get here. And they're not the richest people in Canada, but they're coming, they're retired, nurses and doctors and teachers and accountants and judges, and they come here with their RSPs, and they come here with their investments, and they come here with their pensions, and they just live in our market, and they cut coupons, and they go for 2-for-1 dinners, and they shop at Thrifties or wherever they're shopping, and they just spend money here just like normal people, but they don't really take a job. And they live here for a long, 10, 15, 20, 30, 35 years, and then they, don't, and that money goes back somewhere else. And there's a continual cycle, and there are thousands upon thousands of those people here, and so I'm just saying they continue to put pressure on our market, and they do want to live here, and that's what I think that helps us out a lot.
Thanks.
That wasn't supposed to be funny.
I don't know how you follow that. You just sit with that one for a while. I guess there's two pieces. We share the relative optimism about our current state and the near-term future. That said, we also have to have risk mitigation plans in place, because we are utilizing debt in a number of areas of our business, and we can't ignore interest rates and the potential changes to interest rates. So we take a portfolio approach to ensure that we're balanced and mitigating our risk as much as possible, but we are planning for risk, and we have to in our business environment. I think that the evolution locally, as has been noted by the panel, we are somewhat insulated from some of the activities that we see in the greater economic picture, which is lovely. It's a great place and way to be, but we need to maintain that focus on the fact that interest rates will shift. Even what Robert and I spoke about earlier around the amount of liquidity of cash that's wanting to find a place to invest in the market. If the markets start giving better returns because interest rates are going up, then some of that will dry up too. So we have some critical factors that are impacting our market right now, even in the positive, that if rates start to shift, are going to shift as well.
Thank you. So Guy, being whiz-banger in residential, so purpose-built residential rental has really accelerated in the last few years. So do you see the trend continuing? And what do you see happening with the older stock?
I sure hope so. I mean, I think that we certainly see a need for more. We even see, you know, as the boomers become more and more aged, we see a lot of people that just decide that they don't want to, you know, home ownership isn't for them anymore, looking for rental stock as well as you know, the working community. So we do think that the older stock is really interesting, because when you look at some of the areas where that older stock exists, and people, you know, the young people that are buying really don't groove on that, as they say. So I think that's what they say. Word. You know, young people coming to the market would much rather give up, you know, size and square footage versus have some amenities like being, you know, in high walk score areas and in-suite laundry and those type of things that are just no-go for people looking for new products now. So I hope it'll change.
Thanks. So this will be each panel. So what are the 3 positive things, assuming the accuracy of your forecast, that will influence your market sector in 2016? Sage.
Stability is a big one. I think it is understandably an emotive market at times, and if instability starts, then there will be market response to that, so stability matters. We are seeing a generational gap in our employee base. We have a lot of well-qualified, deeply experienced 60-year-olds, and our next level is in that 30-year-old category. And so that knowledge transfer between those 2 generations is hugely essential for us right now to set us up for the next 50 years, never mind 2016. And then the third part is ensuring that we can run our business profitably. And that comes down to the quality of work that we're bidding on, the partners that we're working with locally, and maintaining kind of a steadfast, logical, non-emotive approach to that as well.
Robert.
The 3 things for me as it relates to our business would be, one, a hope that 2016 sees continued low interest rates and a liquid borrowing environment for the types of assets that we hold. That the importance of that cannot be understated in terms of underpinning floor to value, a pretext for new investment, and I think that translates to the residential sector as well. But that's everything, and that's masked a lot of perhaps underestimated risks on the fundamentals side in recent years. So I'm hopeful that that environment continues. 2, I think that we see in the office sector anyway some relative strength accruing to the downtown core versus the rest of the city. And that's where a lot of our new exposure is in terms of new construction activities, which is encouraging. I think people increasingly are seeing the various building blocks to a complete downtown coming together here, filling in nicely the densification of the residential population, the retail amenities, the general feeling of safety and family friendliness on a 24-hour basis that's increasingly prevalent in the core. So I'm optimistic about that. And third, I'm really encouraged to see some adaptive reuse measures being deployed within what were formerly functionally obsolete office buildings. That's going to be one of the challenges that the office industry faces in the years ahead. It's going to be tough times for B- and C-class buildings in terms of attracting tenants, and to the extent that as an industry, as a city, we can find ways to reuse those for higher and better uses and turn them into sources of energy, ideally in the residential sector. That's a very, very positive thing. So you look at projects like 595 Pandora, some others that are seeing old functionally obsolete office buildings converted into rental apartment units. That's helpful for the office industry, but I think it's helpful for the downtown as well.
Thanks. Jane.
Am I coming back? Okay, the first thing that I'm really excited about is I'm seeing a really large influx of quality intellectual capital to Victoria. So in other words, really smart people. One thing I said I was looking out for last year is to see what happened as the leading edge millennials started to settle down. And I think what I'm starting to see anyway, anecdotally in Victoria, and I think that they are seeing it all across North America, is that they're leaving major centers and they're settling in smaller non-gateway cities. They're leveraging technology to generally decide where they want to live first and then find a job, which is an interesting equation because that's not typically what's happened in the past. I think now it's pretty well understood that you don't need to be in a major center in order to start a business, and in many cases you're able to work remotely due to the technological innovations that we all now know and love. And in fact, I think a lot of employers in big cities are really nervous about their ability to retain and attract quality employees because the cost of living in those cities like San Francisco and Vancouver is really high. So I think Victoria has a lot to offer here, and I think we're going to continue to see growth in that area. We're going to get more people coming, enjoying our lifestyle, the relatively short commutes, great neighborhoods, great schools. Sage and I were just talking about that earlier. And relative to some of those major tech centers, we're seeing a much lower cost of living. The second thing I'm really excited about from a retail point of view is the proliferation of what I like to call the make, bake, and brew retailers downtown. So I think we're starting to get a reputation, and rightly so, for having some amazingly well-curated boutiques that play really nicely on the Pacific Northwest lifestyle. We have some very talented makers in our community. We have great coffee, great beer, and really fantastic food. And I think that's really important because for our retail sector's long-term sort of health and longevity, when e-commerce is really just picking up speed in Canada, and so as that starts to gain traction, I think consumers are going to be able to get commodities pretty much anywhere they want. And so our long-term retail health is really contingent on serving the need for social interaction and the ability to actually experience a true culture of a place. And I think the make, bake, and brew retailers downtown are really contributing to that authenticity for our city. And then the last thing from a retail point of view, which is absolutely huge for Victoria, is the return of the tourist dollar. I think it's something that every retailer I spoke to before this panel noted, and I think it's something that we would be wise to really promote proactively. I think it's also going to obviously keep a lot of Canadian dollars in Canada too, and potentially in Victoria, and so that's also significant as well. I think it bodes quite well for the retail in the next year.
Thank you. So Robert, here's a hand grenade, watch the pin. So what do you expect the impact of the anticipated new Class A office supply to be on the market for the entire region? And break your forecast into classes A, B, and C. And do you expect office and retail rent leases rates to rise, fall, or remain flat?
Well, we're certainly not the most popular guys around amongst Class B and C landlords right now. When you look at the major office projects that are under construction in the region, and it's not just the two that we've got on the go, but a couple others as well, there's about a 7% addition to stock on a roughly 8 million square foot overall market, all buildings, all classes base. And some of that is being underpinned by net new growth, employment growth, and companies expanding and moving from smaller footprints to bigger. But at least 50% of it is being underpinned by relocations. And that unquestionably is generally taking the form of older space to newer space. In many cases, it's peripheral areas to the core, and that's going to leave behind holes. And I think most of that slack is going to exist within the B- and Class C submarkets. Long-term, or in long-term meaning the next 2 to 3 years, I think we're going to see upward pressure on vacancy levels for B- and C-class office. I think we're going to see significant downward pressure on rents there as folks compete to keep buildings full and cash flowing to the extent they're able. I think you're going to see a lot of landlords acknowledging the need to reinvest significant capital in those older buildings to try and keep them competitive. In some cases that'll be successful, in some cases it won't. And on the Class A side, you know, the question of rental rates, I don't think there's going to be a lot of upward pressure because there is a lot of supply, and I don't think the broader market dynamics are such that you're going to see, you know, new build rates going from $30 to $35. But I do think there is minimum rates that are required to justify new construction, and I think those will hold. But the key thing, and much more importantly, is new space will absorb. So I think the Class A space will generally get taken up in the market, and you'll see those vacancy rates probably temporarily spike as the new supply comes online, but settle back down into low single digits within a year, 18 months of delivery of that product.
Thank you. So panel, what keeps you up at night about your forecasts that will influence your market or investment decisions in 2016? Guy, you look like you sleep a lot, so.
Well, I'm a realtor, Wayne, so I don't have no idea how to sleep anyway. So. I think there's no need to identify anything worrisome. With that said, I think that right now our biggest concern is inventory. Again, not to sound like a broken record, but we continue to, even as of this morning, first 18 days of this month, we see our sales up over 15% over the first 18 days of last year, which is, you know, still a long ways to go. So it just depletes our inventory because we're not getting the amount of product coming on the market. So I think that if we kind of look forward, that probably keeps us up a little bit at night. And I won't repeat what I've heard twice here, but the interest rate issue is just something that's a little concerning too, as to where that could go.
Thank you. Jane?
From a retail perspective, I think one of the things that concerns me is they're sort of twofold. And this is really speaking, I guess, more on behalf of some of the local retailers. But one thing that's definitely been an issue is clearly the perception of homelessness in Victoria. All the retailers that I spoke to reported a higher level of shoplifting over the last year, and so that's clearly a concern from a practical point of view. But I also think, while it's a very complicated issue, and I think everyone recognizes that it needs a thoughtful and very considered approach, I think the concern is really that it's potentially overshadowing some of the really fantastic things that are happening in the downtown core, and I think we just have to be cognizant of that risk and make sure that we also equally put forward the good stories that are happening in the city. As a landlord, one of the things that really does concern me is the prevalence of pot shops downtown. We've got, I think at last count, between 23 and 25 right in the downtown core, which is huge. And I know that maybe it's artificially pushed down the vacancy rate, but I just question the fact that it's become easy to do the wrong thing and hard to do the right thing when you're leasing vacant space. And I think from a personal point of view, there's a level of, I think, hypocrisy that it's so hard for me to put in a high-end wine store, and yet I could put in a 5,600 square foot pot shop if I wanted to on the main floor of my building. And so I think that's something we have to be aware of. A friend is a cop, and he said they've had at least 4 armed robberies associated with them. And so I think, we are starting to see a level of crime that comes behind them. It's a complicated issue, but it's one that I'd like to see movement start to happen within the next year.
Thank you. Robert?
The biggest thing that keeps me up at night right now, both with existing exposure on existing assets, but also significant exposure on the new construction side, is capital markets environment. These are exogenous forces beyond which we have any control, and yet have such huge impact on the economic viability of projects that we undertake. And as we saw in 2008, liquidity can be very deep and abundant until it's not. It's usually not something that tapers off slowly and in a measured fashion. And I would expect that, looking at the world as we see it today, there's good pretext for a continued low interest rate environment in Canada, but I think that a measure of caution in how people are approaching capital structures and the basis on which business plans are predicated upon continued low interest rate environment, it warrants some careful study and attention. The other thing that I worry about, and we're seeing, I think, increasing prevalence of this, is a departure between valuations of existing buildings predicated upon fundamentals, which I think are not great and weakening, particularly in lower grade buildings, versus valuations predicated upon capital markets liquidity, meaning there's a ton of equity available from a wide array of sources looking for safe haven, income producing, stable assets, and a ton of debt capital willing to finance the purchase of that. And we're, on our part, not really looking at much in the way of purchase of existing income producing real estate right now, and the main reason being is I think valuations have crept beyond the point where fundamentals justify it, and particularly in lower grade product, I don't see as optimistic of a future for cash flow stability for the reasons I was describing before, new supply, etc., in lower grade buildings. So I just hope that the people that are paying these really low cap rates and monster price per foot know what they're doing.
Sage?
Looking at it from the perspective of our 9 different companies, all in the industrial and construction space, the main thing that's keeping me up is that generational transition. It exists in every single one of our companies, and it is something that we're managing on a daily basis. And to be able to take advantage of the growth that is in the market currently and to safeguard ourselves when the capital markets shift and interest rates shift, we need the right talent to be able to do that, and we need the knowledge to be able to transfer to be able to do that. So it is a generational handover that's first on my mind.
Thank you. So our last question, panel. So what are you most excited about in 2016 and beyond, and where will your focus be? Guy? So your focus will be on making money, but how?
Well, first of all, for our members, although I gripe a little about the inventory, this has been a really exciting time for our members. This is a real fun, exciting, energetic type of market to work in. We only get to work in a market like this every 10 to 12 years, so it is really enjoyable. I don't think 2016 is going to be a lot different, and I'm almost certain of that. Victoria is really starting to shine on a global stage, as it were. It's no longer just a place where old people go to visit their parents. I think the real estate board's focus will be on just increasing the technical improvements that we can make to our systems that we offer to our members so that they can deliver services to their clients, as well as education will be a big focus on our agenda this year, as it is every year, helping again our members just to come up to speed with all things local and again to be able to provide good services.
Thank you. Sage.
I guess at a high level, it's the overall growth for 2016. We are investing a large amount of capital back into the business, and that is driven by the growth in the market. And I think having a market that supports that is very encouraging and quite exciting. And I think there are a number of projects that we're doing that are facilitating that growth, but it's also ensuring that the business fundamentals that are there to sustain it over the long term. So that growth that we're seeing in 2016, supported by the market demands, is probably the piece that's most exciting for us as an executive team. That growth too, there's two components of it. One is going to be organic, and that self-investment that we're making in our own infrastructure and team. And then the other is through asset acquisition and other businesses as well. So being able to facilitate that growth over the next 12 months, driven by market need and the capital to be able to do so, makes for well, it's almost 11 months now, but a fun 11 months.
Thank you. Jane.
I think on a more global scale, I'm really keeping my eye on what's happening with e-commerce in Canada. We're starting to see a lot of major players start to embrace e-commerce and take a real multi-channel approach. And for their part, I think consumers are starting to expect a pretty seamless and integrated experience between brick and mortar and e-commerce sales. And I think it's going to have a really profound effect on real estate, both in terms of the footprint of stores that are required, the types of markets that retailers are going to be able to enter into, and also in terms of the logistics component. So I think keeping an eye on requirements for distribution and fulfillment centers, they become as important as the actual storefront, and I think that'll be really interesting to watch.
Thank you. Robert.
I think that as a region, our story is being nationally and internationally better understood. We have an incredible value proposition for a medium-sized center in terms of job opportunities, lifestyle, comparative cost of living, and as a wider array of people become aware of that, I think we're going to see multifaceted sources of demand of people that want to live here, move here, work here, and that's not just going to be newlywed, nearly dead. It's going to be the whole middle as well. It's going to be families. It's going to be young, single, creative class workers. It's going to be pretext for all of the top-end graduates that 70% of UVic students come from out of market, and so many of those people can't find job opportunities here afterwards. They've had to leave over the years. I think by increasingly we're able to find homes for those people here, good jobs to satiate their ambitions, and all of these things together, I think, create a really positive long-term wind at our back for what this region is going to continue to evolve into over the next couple of decades.
Thank you. So, ladies and gentlemen, in the immortal words of Porky Pig, that's all, folks. Let's give the panel a hand. Thank you very much.
I'd like to just thank Wayne very much for moderating. Great job. And to our panelists, I'd say you heard it here first. Victoria's in good shape. And I think 2016 is looking like it could be very healthy here, and hopefully for many more years to come. Thank you very much for coming out for lunch today and hearing our distinguished guests, and we look forward to seeing you next month.